So this was actually our second foray into the Pilbara, following our earlier Pilbara Growth and Income Fund, which comprised of 28 established properties. So through that experience and through our contacts in the Pilbara, this opportunity came across our desk to purchase 77 apartments in the established Concord apartment building. So the building was actually a prefabricated building which was constructed in 2014. We purchased the building in 2021 from the original developer, and at that stage it was a counter-cyclical investment. The market had gone through a long boom and then a bust cycle. However, we were seeing the green shoots of an upcycle, and that was the reason that we looked at the asset to start with. So we purchased the building for $12.5 million all in, which represents a significant discount to replacement cost. That's about $160,000 an apartment compared to the build price of $430,000 when it was originally developed. When we bought the building, it was coming out of the post-COVID period and a long downturn in the Pilbara market. Whilst there was green shoots, we actually had to do quite a lot of active management of the building to push the rents up and improve the rental returns of the building. Part of that strategy that we employed as well was a capital expenditure program, which was to reduce the operating expenses of the building. So we approached it from both angles, improving the income, reducing the costs, and in the long term creating an institutional grade asset. When we purchased the building, we approached it with a two-pronged strategy. Firstly, we worked on the tenant profile. We increased the number of government tenants, local corporate operators, and reduced private direct tenancies. The building did appeal to these corporates and government tenants because of the fact that it was an all-in rent. So all the utilities were included, it was a secure complex and a single operator. We installed solar panels on the roof of the building. This was a significant capital expense, but also directly improved the operating costs of the building, ultimately increasing the yield for a future purchaser. During our ownership, we managed to secure approximately a 15% year-on-year rental growth. A large part of this was that active management, making sure that we got good, solid tenants, government tenants, corporate tenants, and also we actively increased rent in line with the market conditions and ensured we had regular market reviews. So the outcome of our rental growth strategy, as well as the reduction in operating expenses, was the income profile of this asset improved, and that directly drove the final sale outcome and uplift in capital value of the building. When it came time to sell the asset, we had two options. We could sell off the apartments individually to investors, which probably would have taken several years, or we could sell the asset as a single institutional grade asset. We chose the latter. Ultimately, this was to reduce investor risk by a quicker sale process and returning that capital to investors, avoiding potential market changes. The final sale outcome for the fund was a $28.55 million sale. All in, that's a $16.05 million increase on the purchase price, or 2.3 times notionally on cost. For investors, more than doubling the acquisition cost was a fantastic outcome and just reward for backing a counter-cyclical investment such as this. A large part of the success of this fund was that it touched upon all of the expertise across the Westbridge business. That included our residential team's experience with apartment buildings and apartment developments, our key relations team's understanding of our investor needs and wants, our property management team's experience with residential properties, and of course our commercial team and managing investment grade assets. At the end of the day, this fund was a fantastic result for investors, but it's also a textbook case of buying well, improving that asset while you own it, and then realising that value when the market's ready.